All right, up on YouTube, up on virtual trading floor. If someone has the link, please post it. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Getting a little bit more hedged. Also got a little bit of neo long as a swing because it never pulled back to stop me out. Let's go to the charts. Seeing here these comments that from Carl Icahn that's getting posted. Not sure the Fed can create a soft landing. I think markets are in for a rough landing. Large amount of people in the market who do not know what they're doing. Well, Carl, if you could get those people to watch the Pro Desk afternoon meeting on Derrick the Trader, maybe they would know what they were doing. Carl Icahn, I really do think there could be a recession or even worse. All right, so yeah, oh man, market given upside continuation today again. We're approaching another round number here, which is 450 in the SPYs. I haven't viewed 450 as resistance. 420 was important, 430 was important, 440 was important. We just blasted through like one level per day almost, it seemed like. And then our next real level up here is this like 458 area for the SPYs, where if we start getting a close above there, the market would go into bullish territory. Right now the market is what I would call neutral territory. We've gotten back above some key levels like this 440, but we have not broken others. You know, we're kind of back into, in a lot of ways, the midpoint of the entire move here that we've been dealing with for the year 2022 for the market. And it's just the degree of the pace that we went from basically the low to the midpoint of our entire year trading session. I'm just eyeballing that it's the midpoint. But the pace that we were able to do that here, 1, 2, 3, 4, 5, 6 trading sessions. Blistering pace. S&P up another 1% today. Your NASDAQ is up 2% today. Your IWM is up 1% today. Let's take a look at the Qs and the IWM to see if we have a similar story here. Yeah, you know, Qs above 350, that's the spot where I think that we went from bearish to neutral. We would go from neutral to bullish above probably the area between 366 and 370. So we'll see it at this rate. We'll be there by the end of the day after tomorrow. It's just insane thing here. The degree to which we retraced, what is this, like $35 in the market is massive. Not as strong as the SPYs. We're not you know at that halfway point for the year like the SPYs kind of are. We're still a ways away from the 200 day. But the degree to which we got back into neutral territory here, the speed in which it happened is crazy. And once again, we are extended. We had one light little rest day yesterday just to get upside continuation and further extension in the S&P and the NASDAQ once again, which prompted me to hedge myself a little bit further into the close. And honestly, the IWM here, I didn't want to call the IWM bullish 2 days ago because, yeah, we were getting the close above 207, but we were super extended and only getting that close by 25 cents or so. But now, after yesterday's rest day, this ADMA is catching up and the market once again giving a close above 207. We're literally right on that borderline. What's this high? 207.27. What's this high? 206.65. This big tail here, I don't know if this tail is real. up to 209. What is that, February 10th? What did the SPYs do on February 10th? Oh, it could be real. It could be real. But I'll still use that like kind of broader 207. Maybe we want to call it 207 quarter for the IWM. Either way, we got to close at 207.50 today. And the IWM is honestly not that extended. The SPYs and the Qs are a good bit more extended than the IWM. IWM is not that extended. It's basically closing in bull territory. So, you know, if you go back to our scale here of bearish, neutral, bullish, where are we? You know, SPYs are neutral, Qs are neutral, and IWM is technically into that bull zone, which is interesting. We do got to take things, I think, with a little bit of a grain of salt here, particularly for the S&P and the NASDAQ, because of the degree of the move. Seeing out of the corner of my eye, a general question from Will. Do you give levels less significance after ex-dividend? It's a really good question. Ex-dividend on the SPYs and the Qs can kind of mess the chart up for a period of time. We just had an ex-dividend, I think, for the SPYs last week, which was like $1.30 or $1.40, which, you know, technically would mean that without that dividend, we're even higher. So it's impressive. I find that, and this is just, I don't have any data to support this, and data is what is kind of key. I kind of find that in the immediate aftermath of the ex-dividend, like the first couple of days after, that the SPY chart can like act a little bit skewed, and you're almost better looking at like a cash SPX chart. But I find that after a week or so, it kind of smooths itself out. That dollar and change or whatever kind of smooths itself out with the levels, and it doesn't really matter as much. That's kind of just more anecdotal than actual data supporting that. It's just kind of what I've noticed over time. So again, market today, just incredible. And what we spoke about in the morning meeting today was the potential of this happening. You know, I was, the message I was trying to get across in the morning meeting today is that technically upside continuation today is a lower probability situation if you want to talk about just pure technical analysis. Pure technical analysis, the higher probability situation probably would have been a bit of a pullback today. Then the second highest probability would have been sideways choppy action similar to yesterday, which I would have viewed as bullish. And the lower probability situation would have been the break higher that we actually got today. That's if you're going based on pure 100% technical analysis. And I think, as everyone knows, I am really big into technical analysis. I love it. But I always like to view it through the lens of qualitative fundamentals and market dynamics. And I don't know if the fundamentals justify us ripping higher, given that the TLT today made new lows. That oil, I know oil took a break today, but oil was up 5% yesterday. Interest rates are moving up. The yield curve is flattening. I don't know if the qualitative fundamentals justify this upside move, but the importance of market dynamics, right? The importance of reading Pat's note every morning. The importance of understanding positioning and sentiment, because it's positioning and sentiment that actually creates these bear market rallies, which it's almost getting to the point where if this lasts much more, we can't call it a bear market rally anymore, to be totally honest. But for now, even as we just kind of get back to neutral territory here for the market, I'm going to still stick with that term until we really start kind of breaking out across the board into bullish territory. I kept using that analogy just, it seems like yesterday. I guess it was just only like a week or two ago. When we were kind of at closing lows here for the year for the S&P, and we kept seeing where positioning and sentiment was, that it was just getting so crazy bearish that I kept using that analogy of it being like a spring, and that spring, all the pressure is coming on it, and if that spring just releases, you can get basically a huge bear market rally because everyone is hedged, everyone is short, and everyone is under invested to the long side. You're only under invested to the long side if the market goes up. You're not under invested to the long side if the market goes down. But at a certain point, And we even saw, I think just yesterday morning, the Goldman positioning indicator showing how underinvested people are. At a certain point, this market could start seeing chasing. And I don't know anymore at this point, yesterday and today, what type of buying we're seeing. The first few days of this rally, it really felt like short covering rally that was going on, and that's what our data supports. The last couple of days, I'm not sure if this is still short covering at this point or if it's new longs running in. We did discuss this morning and yesterday morning that it seems like the maximum pain point for this market is still higher. And we need that almost to wash itself out in some ways for the market to be able to pull back if there is going to be bear market continuation. You need those underinvested longs to start panicking a little bit, and you definitely need those shorts, the hedges to get unwound, and the shorts to kind of exit this market a little bit. Once we hit the point here on the upside where the shorts have all thrown in the towel and they just can't handle this degree of a rally anymore, that's when we'll be able to have a more significant kind of time or price correction. And I think that actually will be the real important thing for this market. Right now, as we just kind of continue to rip higher, it's just a feedback cycle of buying. Shorts getting squeezed out and possibly maybe new longs starting to enter the market. But when we run out of that ammo and the market does have a pullback, which it will at some point, what does that pullback look like? Do we just immediately collapse and fall back down? Or is that just actually going to create a higher low to the market? And if we get like a real pullback and we can create a higher low at, like the bears really come in with their maximum might and try to force this market back down after getting squeezed, and we, create a real higher low into the probably the space between, let's just call it 435 and 440 roughly for the SPYs, and we get a real higher low followed by a higher high, that's the point where I would feel really confident that bulls have truly taken control of this market. I don't feel that way now, but I'm happy to be long and participate into this rally, but I did hedge myself a little bit further kind of into the close today. And it is also notable, a little bit notable, the very, very low volume on the upside continuation today. This is one of the lowest volume trading sessions. This looks like it might be the second lowest volume trading session for the SPYs that we've had all year, or just about. So that's kind of interesting also. So that is the market, and again, we did discuss and we did position ourselves to be able to take advantage of this. We had a lot of potential trade ideas on the radar today, which I'm happy to go through. I'll start with the ones that I was involved in. Microsoft, inside day and up on the break of 300. Yesterday we had discussed that Apple was already extended. Now it's even more extended and coming into this big 170 resistance. We discussed that Apple was extended, but Microsoft, the setup was really there, and 300 is a hugely important level. I actually missed the initial entry on this. The best entry would have been to be buying this right through yesterday's high. That inside and up, which is also clearing $300, like $300.15, something like that, versus the opening low. You'd be taking on $1.30 of risk or something like that, $1.35 of risk for that. Keep in mind it is a $300 stock, so it's not massive. And you probably would have been able to get your risk fully covered just into this initial uptick. I missed that. But I really wanted to be involved in Microsoft above 300 today, and honestly, probably shame on me for not having at least a little bit at the close here to swing, because it'd be in a win-win situation. I ended up trailing it kind of tight and getting stopped out because I felt like, the other side of it is I was like, all right, you already got plenty of longs on this, market's getting super extended. Do you really want to be adding a lot of swings today to the long side? And the answer to that was no. So I decided to trail it pretty tightly. I was trailing it on a 15-minute chart, but that 15-minute chart pivot was basically the same as this 5-minute chart pivot here. So I got stopped out on this pullback of the remainder of my position. And definitely got a little bit lucky that this opening low didn't break on this pullback to equilibrium, because I would have gotten stopped out there. Instead, I was able to make a few bucks in Microsoft today. So Microsoft worked out really well. The other one I was involved in was Neo. We talked about the possibility of, so BABA was having this huge gap up this morning because they increased their buyback by $10 billion. And by the way, shout out to Aaron on a great call out on this 5-minute pivot here, because what we said about BABA in the morning meeting is it's opening up a little bit too extended to be able to buy. The important daily level is 110. So, if you get a nice pullback and you're going to be long versus 110, that's great. But like what we love to do as a team is find the smaller risk entries on a smaller time frame based on what the information that the daily chart's providing you. So that 110 is usually important. It's gapping up really big, which has it extended. It gives a technical pullback, and right as this ADMA is beginning to catch up on the small time frame so that it's no longer extended, that's when you get this great looking 5-minute hammer that kind of comes in. Aaron communicated that to the team and was involved in it. Turns out to be the low of the day. So that was a really good trade. But it was really kind of based off of BABA that we communicated JD. The problem with JD was the degree of risk. I didn't love the entry setup up here. So the right stop loss really would be the lows of the bulk consolidation that it started to put in here. So you have to pay up a lot on that one. Or, much more reasonable here, because of the inside day setup, would be to look for a continuation in Neo. So Neo, the break was $21.20. This was another really tricky one. I know that this one and in pins, people got pushed out today. They really made this tough. 21.20 here is kind of the break, but it was kind of a lot of risk here and still a little bit extended. You could have used this low of that bar as your stop loss because you have a little bit of a tail here, but you have an even higher probability of getting shaken out off of that than versus lows. So I was kind of just paying attention to my degrees of extension and not getting too heavy. Also just because of where the market is. So I was able to buy some stock here. I was able to add some at $21. I got a kick somewhere here before it kind of broke down a little bit. I actually didn't get stopped out at lows, and I know a bunch of you guys did. That's prudent, to be totally honest. I know some of you might be frustrated if you got stopped out on this tail here at lows. It's prudent. It's the right thing to do before this continuation then comes in, so that's always frustrating. I was light, so when this thing kind of broke lows and the market was pulling back, I really wanted to just watch it because the market itself at that point was still just acting so strong. Your Qs were weakest, but extended. I wanted to see how they handled the equilibrium. And that's why the SPYs were bull flagging and the IWM was just straight ripping higher with momentum. So I'm kind of watching the market here and I'm recognizing the fact that I'm not too heavy. So I was kind of giving this more to the gap fill as my stop loss instead of just kind of using the opening low. And I was light enough to be able to do it. If I was heavy, I wouldn't have been able to. If I was heavy, I would have gotten stopped out at lows with everybody else who got stopped out. I know it was a bunch of you guys. But I didn't. I was able to kind of hold through this, and it is still just a pullback in a technical equilibrium. There's nothing really wrong about this. It's just unfortunate. You do have a lower probability of getting pushed out when the ADMA is kind of caught up to your stop loss. But this wasn't necessarily unhealthy either, because it is just into the equilibrium zone, and then of course that's where the real pivot comes in. It shook people out, and then it was able to kind of go here. So I was able to sell some on the way up, and I'm swinging a very small position on Neo. I do like the company. I do think the chart's interesting, and it's one of my preferred Chinese companies to kind of be involved in. And then we had a whole bunch of others that I didn't trade today, and many of them worked to one degree or another. We talked about the banks kind of in general, and I said that JP Morgan was my favorite bank. I liked this rest day from the XLF. I liked that in Europe. The banks performed well, and in Europe, the car manufacturers also performed well, which is why General Motors was also on my list today. But seeing it in Europe, and Europe lately has kind of been leading the United States to some degree, that the banks performed well, and knowing that these had rested, knowing that we were looking at Bank of America yesterday but that the XLF was a little bit too extended, and that caused Bank of America to not work yesterday. I was looking at the XLF today, now that it was able to have that rest, and it was performing well in the EU. Particularly, it was JP Morgan that I was looking at. The problem with this one was it just gapped up too much. So it made it a little bit difficult. I really felt you had to buy versus kind of yesterday's high. So I ended up not getting involved in that one. And here at the end of the day, it looks like kind of a wishy-washy candle in JP Morgan. Gapped up and spent the entire day kind of consolidating it. But where a lot of our focus, and I guess I can look at GM real quick because I talked about that. Oh yeah, GM looks like it tailed up and not a great looking daily candle. But a lot of our focus today was could we get continuation actually in growth stocks, which have bottomed a little bit. So we were looking at Snap for continuation. We were looking at Square for continuation. We were looking at Pins for continuation. We were looking at DKNG for continuation. We were looking for PayPal for continuation. SoFi maybe for continuation. SoFi is the only one that broke yesterday's low, and it kind of did it right off the open. All of these, for the most part, worked to one degree or another. I know Pins was a focus for a lot of people, and Pins was one of the few that broke its opening low, which can be a little bit frustrating. I understand that. You just got to recognize that you kind of cheated on the daily candle if you were buying Pins early on. And sometimes I like to cheat. Sometimes I like to cheat because you can get in at better prices and you get a better risk reward. But you really want to make sure that you have your other confirming factors that are kind of coming in there. And the volume wasn't really there in Pins like we wanted it to be, but you certainly had the market on your side. This market was so strong today. Interesting that the IWM, by the way, started strongest and then just totally fell apart. And the NASDAQ, which started weakest, totally ended up catching this huge bid here. But anyway, going back to Pins, technically on the big picture, this trade is still intact, even if some people got shaken out because they were buying early and the opening low broke. It is still intact because the inside day low is still in play. And it closed okay. So we'll see if we can get continuation on some of these things further. As I kind of scroll through that list, none of them closed. None of them were like obscenely good trades, to be honest, as far as the reward that it gave you. Especially compared to the extension that the NASDAQ was kind of providing today. So we'll see. I think it's notable that these didn't give, go back into a Square or a PayPal. Like PayPal here also didn't fail, but that's not much of a continuation. What was it? Snap, same thing. Technically it didn't fail, but that wasn't that much of a continuation. Even Facebook here, it seemed like Facebook was getting a lot of bull flow today and was trading really well, but now that I look at this daily candle, it actually does not look like a massive amount of continuation. So we might have to take a pause on these growth stocks because of how extended the market is right now. I don't like the idea of coming in and buying these growth stocks tomorrow when they couldn't perform as well as you would like them to, given what the NASDAQ did. And now going into tomorrow, the NASDAQ is going to be even significantly more extended to the upside. So yeah, we'll clearly see how that all plays out. But the other side is, don't fight it. I think a lot of people were trying to, we spoke about stock sell for the semis too. This was the trade in here, I think. $40 was the level, and it kind of flagged through it. I didn't love the time of the day. This move here, though, should definitely be more than enough. Worth the dollar off whatever 20 cents worth of risk, so it should be more than enough to get your risk covered, though this eventually failed on an intraday basis. But I guess the point is, while we did expect that there was the chance because of maximum pain for this market to give upside continuation, and there were some okay trades out there today that we were able to capitalize on, it wasn't a barn buster day compared to what the market did. As long as you're not, just make sure that you're not fighting it. Just make sure you're not fighting this to the short side right now or without a signal. And it seems like a couple people were doing that. And I get it. The degree of the move that we've had over the course of the last 5 days coming into today, and then we're breaking higher, I understand because I've done it. I understand how you can kind of just get into this fight mode of it has to go down. Look where it came from, and you keep kind of trying to short it and getting stopped out, or even worse, shorting it and not getting stopped out. So if you're really trying to put those shorts on because of those conditions of this degree of extension, the same rules apply as always. You're better off shorting on the way down, and you got to do it versus a level after you got an upside pivot point. If you're just shorting on the way up and you're fighting this thing, you could be doing a lot of damage to yourself. I mean, even for myself, like, yeah, I've got some shorts on, but I'm doing what I probably shouldn't do, what I always tell myself not to do, and what has never made me money in the past, which is I'm just kind of purely hedging myself right now, almost with no stop loss, but doing it on a very small amount of size. So I am even right now net long the market, but as this market gets extended to the upside, I'm being less net long the market, meaning I'm selling longs and adding a little bit on the short. Like I added a little bit of UPro today at about 62.50. I added a little bit of SPYs today at probably 449 or so, maybe a little bit above 449. And then into the close, when we saw the bear flow hit on the TQQQ, I shorted a little bit of TQQQ at around 56. And I'm doing that as I'm selling my longs on the way up. But I'm still net long. I'm just significantly less net long. And my game plan on this, even though I don't have a stop loss, the idea is, and sometimes it doesn't work out this way, the idea is that if the market continues to go up, fine, I'm going to make money on that. But I want to hedge out just this degree of extension. So I have a game plan with UPro, with the SPYs, and with TQQQ to basically be back to flat by the time the market is no longer extended based on the ADMA. So once the market gets to the ADMA through a timer price correction, I definitely by then, if not sooner, will be totally out of those short positions. And if that happens through a price correction, I know exactly where and what percentages of my shorts I'm going to cover as it approaches the ADMA. And if it happens through a time correction, I'm going to get a little bit lighter each day until I have none left. And then from there, we'll kind of just see what happens. Icon says he believes oil prices have peaked. Interesting. Someone let the guy at the gas station know. So that is, I think, all I've got for you guys today. So I am happy to take a look at any questions, and then after the afternoon meeting, I'm going to bang out a couple emails and get ready to drive back to wonderful Victor, Idaho. Okay, cool here. So let me scroll up into the VTF and look for any questions. Mainly comments towards Carl Icon and not towards me. So from Dalek here about the SQQQ. So this is the short ETF. And another person, I think it was Edwin earlier, said he was buying one of the short S&Ps as buying the reverse ETF as I was shorting the TQQQ and shorting UPro. So so it's the same answer. It's the same answer that I had for him. This is the same trade, right? If you're buying SQQQ or whichever one Edwin said that he was buying, which was also an inverse SPY ETF, basically. I'm not sure if it's a leveraged one or not. It's basically doing the exact same thing as what I'm doing, which is shorting the market. I'll tell you why I don't like, why I prefer to do it the way that I'm doing it, which is shorting TQQQ and shorting UPro, as opposed to buying SQQQ and buying whatever that inverse leverage SPY ETF is because of time decay. I'll get a little extra bang for my buck on the short side by being short those products than you'll be able to get on the long side by buying these products. The flip side of that is there might be an overnight borrowing cost to it or something like that I'm not sure about, but usually it's extremely low. So I prefer to be short leveraged ETFs most of the time than to be buying leveraged ETFs. With that said, if this is just a trade that you're putting on for the same reason I'm putting the trade on, to hedge yourself out a little bit, and you're going to be out of this thing over the course of probably the next couple of days once the market's no longer extended, or that it happens through time or price, then this is just fine. It's the exact same thing, but the opposite of what I'm doing. It's just fine. And I mean, look, I've been very actively trading this Labu, doing really well with it, to be honest. I've been very actively trading this, but this is a 3x leverage biotech ETF. This thing suffers from pretty bad decay, actually. I had told everyone when I got in it, yet I was in it anyway, that I had just the night before read an article about how like this Labu has, outside of the VIX products, which are ridiculous, this Labu has some of the worst decay out of any of the leveraged ETFs. But that just comes purely from the math of the volatility, right? When you're dealing with a leveraged ETF, and you guys can do your own research on it. I don't want to try to break out a calculator here and kind of go through how percentage math works on leveraged ETFs. But basically, the more volatility that your leveraged ETF has, the more it's going to disassociate from the underlying. Meaning that, you know, if you held this Labu for a year, and let's say at the end of the year, the XBI, the biotech ETF, is up 10%, Labu is not going to be up 30%. It's going to be up 30% less some kind of decay that came through based on the way that percentage math works from volatility. Yet I'm still in it. So, and yet I'm still in it, and I've honestly done extremely well with it. This has been one of the best trades that I've had. I got really heavy again in here, and I'm still looking for a move to 20, but I've been piecing out a little bit on the way up. SPXS was the one from Edwin. That's the S&P 500 Bear 3X. Cool. From Jared here, would you still be looking to put these market-related shorts on if you didn't have as much exposure to the long side? Not the way that I'm doing it, Jared. That's for sure. Not the way that I'm doing it. Not just like, I definitely wouldn't just be shorting some UPRO and shorting some TQQQ and having a game plan that's based on extension no longer being there without a hard stop loss. If I was flat, and I was recognizing how extended we were on the upside, I might look for shorts, but I would do it exactly the way that I described earlier. You can't just be fighting this market on the way up. I would want to be shorting it on the way down versus a level. And then I know my risk, and I get stopped out, then I get stopped out. I know exactly what I'm doing. So yeah, so that is that would be my answer to you, Jared. They would be trades. And again, extension is just a layer of probability, right? I can tell you right now that if the S&P were to open up tomorrow at this price, I have a worser probability on my longs and a better probability on my shorts based off the degree of extension as a layer of probability. And that's just forgetting about everything else. Obviously, you always have to weigh all of the other factors. But just purely based on a piece of probability that's coming from extension, right now in this moment, I have a higher probability of making money short than long based on extension. But you gotta obviously you gotta look at everything else. Follow up from Jared here. Also wondering if we are looking for names to short, if for example Tesla, Nvidia is right or a complete wrong idea name to short. They are becoming the most extended, but at the same time there is relative strength and option flow. So these would be names to avoid shorting, right? So yeah, and basically what you're describing here is exactly what I was just talking about paying attention to the other pieces of information. You know, if you're just looking in a vacuum at extension, then okay, fine. You know, Tesla and Nvidia are getting pretty extended here. But the flip side is the relative strength. The flip side is the option flow. Those would be layers of probability. That would be on the side of making more money to the long side than making more money to the short side. Absolutely. So we got to pay attention to all of those factors. Relative strength and relative weakness can always flip. You know, that can always change. Option flow can stop. Option flow can reverse. So you know, continue to pay attention to it as it evolves. I don't know why. Yeah, you know what? I guess it's not entirely true. I was gonna say, like, I feel like I tend, but I think this has just been recently. I was gonna say I feel like I tend to be like long stocks and short indices, but that's not. It's really not a true statement. People on here have seen me very much short Palantir, very much short Uber, very much short Lyft, very much short for a solid loss Roku, short Tesla in the past. I've definitely shorted plenty of individual stocks also. AMC, right? Yep, AMC. There we go. That was a successful one. Being short AMC. Let's get this AMC back up, man. Get it back up into the 30s so I can short it again. Too much of a wimp to short it here, even if I still think it's worth $3. Sick move today from AMC. Sick move from GameStop. You wonder. I didn't really put in any thought into these things catching their bid today. You wonder if this is so why out of nowhere did we see AMC and GameStop and Bed Bath & Beyond to a smaller degree start catching bids? I know it was because the option flow came in, and maybe it's the apes and all that stuff, but I'm just thinking out loud. I wonder if it has anything to do with funds that are just generally short and are really getting hurt here now at this degree of extension to the upside, like we were talking about the maximum pain point, who are just kind of being forced to, at this point, size down their shorts across the board in the indices, which maybe is further leading to this rally, and also possibly in things that are heavily shorted, like in AMC. Just a thought. Which would, if that was the case, it would probably mean that we're closer to a short-term top than anything. Though it could be more. The apes are back. The apes are back. Yeah, Palantir. Oh man. Cool. Anything else, guys? Any other questions? Not too many questions today, which I'm fine with because I gotta get on the ROAD at some point. Anybody ever see that movie with what's his name in it? Chris Farley, and they're in the back of the car and getting pulled over. The cops like, and they're high on something, right? They're breathing in nitric oxide or something, and they're like, ROAD. What a funny word. I don't know. Too old for you guys. All right. And now Felipe's posting monkeys. I'm gonna call it there. Have a great night, everybody. Another solid trading session today, where we were pretty successful based on the thought process in the morning meeting on what was going to be able to happen, and I love that. So keep learning, stay safe, manage your risk, like always, in everything, and I will see you all tomorrow. Hold on.